Joining us now in the after hours is Victor Adair. He's a Vancouverite, but we're not going to hold that against him. Well, let's just jump right into it, Victor. What do you think about your kind of countrymen to the east there, the Albertans, and their complaints about you guys with the pipelines?
Oh, I tell you what, I was in Calgary about 6 weeks ago, attending a conference put on by my real good friend Joseph Schachter.
And, I remember Joseph. He used to work with my father way back when in the Richardson Greenshield days.
That's right. He did work for Rich Green way back.
Yeah,
and it might have been when it was Rich before it was Rich Green. I don't know. But I tell you what, I bought a T-shirt that says, I love Canadian pipelines.
Oh, and, nice. So you're more of an Albertan than a BC guy.
Hey, listen, if Canada breaks up, and Alberta's going to go their own way, I live on Vancouver Island. This is a very NDP socialist kind of area out here. Now, it's a great place to live because it's got the best winter weather in Canada. But I'd consider moving to Alberta and going with them.
You know what? You've been in Victoria for too long, man. You might freeze in Alberta. You wouldn't be used to it.
Yeah, I know. The weather would be a problem. But then you know what you do is you just go to Palm Springs for the winter and you'd be cool.
That's right. That's right. Actually, I'll tell you a couple of little stats that, we don't want to talk too much Canada because it'll put all of our, American and European listeners to sleep. But Alberta is actually got the lowest amount of representation per 100,000 people. So, I can't remember the stats is. It's something like there are Canada's average is 0.9 seats per 100,000 people, meaning that's your representation in government. Alberta has a representation of 0.68. So which means they're underrepresented in the federal government. And then you combine that with the fact that they actually go and submit to the Ottawa. They are a net contributor to the Canadian fiscal situation the most. And then the real maddening part about it is we as Canadians are busy telling them that they can't even get world prices for their crude oil. We're blocking them from getting their crude oil to markets. So although I am not an Albertan, I'm very sympathetic to their cause, and I wish we as Canadians would smarten up. And we could choose what we do with the money that we earn from basically developing that energy properly. But at the end of the day, we are dumb to just be letting it kind of go to waste. We'd be better off getting world prices and putting that to green kind of climate change initiatives.
Well, I absolutely agree. We should have the opportunity to sell any of our products to more than one market. So there we go.
Yeah. Okay. So let's.
Hey, you know what? I was reading something yesterday. It was an interview by a commodity trader that there's a magazine in the 80s called Intermarket Magazine. Do you guys remember that?
No.
Oh, okay.
In the 80s, I was still listening to New Order and trying to get that.
Okay, well, Intermarket Magazine used to publish these great interviews. It was sort of like Jack Swagger's book before Jack Swagger did his books on market wizards, right?
Right.
And this was an interview with Roy Abbott, who used to be like a big individual player in the commodity markets. And I was reading that, it was reminding me of trading commodities in the 70s and the 80s. And back in those days, everybody was kind of the reason to trade commodities was to try to turn 10 grand into $1 million. You weren't trying to just kind of get 10 or 15 or 20% return a year so that you could lure a little capital away from the stocks and bonds and real estate, and advertise yourself as being non-correlated with other assets. I mean, it was sort of like everybody, whether it was Richard Dennis or on and on, these different guys, Paul Tudor Jones, everybody wanted to turn a little bit of money into a whole bunch, and the markets have changed now.
Oh yeah,
it's not as much fun. Those hedge funds have become asset gatherers instead of going for the old school shoot the lights out kind of returns.
Yeah, what did you say, that hedge funds were just beta dressed up as alpha or something like that?
Yeah, alpha just dressed up as levered beta. That's
yeah.
That's the
great
exactly.
line. I remember that from one of your sites.
And then the other problem about it is that there's nobody getting the triple-digit returns. That's what we need to return of. Apart from Crispin O'Day, who is the only guy that's ever kind of gone with size for those kind of returns. There's none of those big macro guys are willing to take trades and go up 30 or 40%. I had a good friend that told me once that if you have a fund and you're up 40%, you stop trading. Because
Sure.
the reality is that if you're up 80%, nobody's going to give you money.
Oh, I was thinking if you're up 40%, you want to just hold it till you get through your year end so you can post a 40% year.
No, it was more that you actually did yourself a disservice by going up 80%, that you wouldn't be able to attract money because your volatility would be too high.
Yeah, everybody thinks you're
problem,
way
right,
too much of a cowboy.
It's just that there's none. And, in the good old days, Canadian hedge funds, they used to be, all those sorts of returns would be commonplace, and now nobody wants them. And everybody, as you say, is just trying to earn their, safe 8%. And that, so be it. That's fine. That's a great market. But it just seems like we've lost those truly kind of larger than life individuals that would be willing to go for that. But, maybe that's the Vancouver in blood in you, because we haven't talked about the Vancouver Stock Exchange. So now, how did you get into commodities opposed to penny stocks and gold mining promotions? Because that's usually what people from out west are, when they're in finance, that's usually their background.
Well, I tell you what, when I got out of high school, I got some summer jobs working for mining companies off in the bush. And it was perfect because you worked 12 hours a day. There was nothing to spend your money on. You could save money. My first go around out in the bush, I went and hitchhiked around Europe for 7 months with the money I'd earned in the bush, and then went back to the bush and went to university. But I was working for those mining companies, so I got trafficking in penny mining stocks, where I'd read the price that the thing was trading in yesterday's newspaper or something, because I was way out in the bush somewhere. But I started my career about 1970, 71 or something, my career as a trader. I mean, trading a few $100s worth of penny mining stocks in Vancouver. And the mining business was great for me. When we elected the first NDP government in British Columbia in 1974, NDP, for those people outside of Canada, it's more of a socialist kind of a government. I discovered the Western United States. I was all over the Western United States with about $5 in my pocket. I don't know how I stayed alive, looking at mining properties in all kinds of places down there and trying to bring deals back to Canada. Just an entrepreneur with, my last dollar in my pocket trying to do something.
Oh, okay, so you actually were in the mining business and you were doing that. And then, so when did you start trading commodities, and how long has it been that you've been this?
There's a coda to that. I was in the mining business, but when I was in university, I had majored in creative writing and history and stuff like that. I thought I was going to be a script writer for movies when I grew up. I didn't, but I was in a mining deal in Toronto, and there was a guy on Bay Street called Sid Rosen. I remember this now. He had the entire floor in a building right on Bay Street, about 300 Block Bay. And I'm up there. We're pitching him on some mining property we got in Nevada or something. And he takes us down the hall. And here's these two guys that got hair like Jimi Hendrix. The room is blue as smoke. They got charts hung up on all the walls. There's about 30 telephones on their desk. A Reuters machine clacking away, and these guys were arbing silver between London, where they traded it in sterling, and New York, where they traded it in dollars, and they were using Sid's money to do it, and they were making a lot of money. And I just thought, what the hell is this? So that's when the hook got set.
Wow, I didn't know that. So what year was this that guys were arbing? And I would thought that there would be no way you could do that out of Toronto. Arbing between New York and London.
They were doing that. I'd say that was 1974. Wow. You remember in those times, the very first gold futures contract ever in the world was in Winnipeg. And they were trading the 400-ounce bar. And the arb there was Bank of Nova Scotia would set a price for the day. And it would be like the PM fix out of London. Well,
right.
If the Winnipeg market traded below that, people would buy Winnipeg and sell Bank of Nova Scotia, because Bank of Nova Scotia kept their price the same all day long. I mean, we can't imagine. I mean, it was a layup arb. Right?
Oh my!
Yeah,
that's awesome.
For a while, Winnipeg was the biggest gold trader in the world. There was like a period of 9 months or something before the COMEX listed gold. that all the Americans were trading it out of Winnipeg, and for a while it was just a hopping market.
Well, during 74, the price rose from roughly $100 to $200 because the thinking was, come the first business day of January, Americans are going to be, January 1975, Americans are going to be allowed to own gold for the first time since the 1930s. Okay, right. So the window opens, Americans can now come in and buy gold, and nobody shows up. So the price of gold in 1975 basically falls from $200 all the way back to $100. And then it starts this incredible run to $850 in 1981.
I didn't know the details of that story, that it was actually that they ran it up and then it was a classic buy the rumor, sell the news, and then it gave it all back. We're going to have to do that. We have a kind of a section we call This Week in Trading History. We're going to have to definitely look into that story and research that, because that's a terrific story. Like I had no idea. So that was, and that was period that the run up was when the Winnipeg Exchange was the largest trader of gold. Does that make sense?
In 1974, the gold price was going up in anticipation that this huge market of American consumers was going to go bid on the gold market, and that they'd been locked out for 40 some years. So and when they opened the window, nobody came.
Right. So this Sid Rosen guy, what did he go on to make a firm? Like, what was that firm and what was it called?
I think Sid controlled like a whole bunch of penny mining stocks on the Toronto Stock Exchange back in those days. Oh, and I think, I don't know, people are going to hear this, so I better not say too much because I'm not sure.
Sid, if you want to, you can call
let's
in
say
and tell us
I was in
did.
a boardroom in the middle of the building, and I saw curtains all along one wall, and I thought, there's no windows there. That can't be. We're in the middle. And so on, the guy says, "Oh, here," and he opened the curtains, and it was a calendar spread, like a great big flow sheet, and it listed the dates of the various companies that Sid was involved when they had their annual meetings.
Oh, okay. So he was really a stock guy that had done macro. So that was it. It set the hook, and then you were decided that macro was your true love. And did you from then on just go out and start trading futures and trading macro?
Yeah, I started to trade futures as a futures broker in British Columbia before you needed a license.
Your grandfather didn't. You actually have never been licensed.
Oh, no, I have been.
No, I'm just joking.
I mean, there was a firm. I went over there. They had an ad in the paper, and I'd been trafficking in gold bullion for a couple of years. So, I got a job, commission only from day one, sat down in front of a quote machine, and thought, okay, what do I do now? I went down to Seattle on the Greyhound bus and wrote an exam down there to pass the American exam, because I felt like I should have some sort of an exam under my belt, and I managed to pass that. But then, later, and the trouble in Canada, the commodity business was governed by the people who governed the stock business. And it's always been a problem in Canada because the stock people don't understand the commodity business, but, there wasn't enough commodity business to have like the CFTC like they have in the States. So it was like the SEC was going to look after the commodity business like a stubborn stepchild or something.
Right. To some extent in Canada, though, they also leave it alone and they haven't updated the rules in 30 years, I think.
Well, yeah. For years, it was in the business. I mean, I struggled in that. Like commodity guys, you have a run of good luck and then you can't find your ass with both hands and so on. But at different times, I had a lot of fellas that would report to me, like I'm managing some people. Or at one time, I was, the national manager for one of the bank-owned firms in charge of their commodities business. And I used to say to the guys, listen, I know, you're sales guys, and you hate the compliance department. They're just putting roadblocks in your way and so on and so on and so on. But let me tell you, the compliance guy is actually your best friend. Because if it wasn't for him, there's going to be some other guy on the other side of the country who's going to blow up the firm and you won't have a job tomorrow. And also, the compliance guy is going to keep you out of trouble that if you were left to yourself, you'd surely get into.
you're definitely a glass half full kind of guy.
So
No. I'm very much an optimist. Oh, absolutely.
Yeah, no, for sure. I agree.
So-
Anybody that says that finds a positive lining on the compliance guys, he has to be a kind of an optimist. I have a quick question in terms of the housing market. I got to ask you. You're out in Vancouver. You're in Victoria, I assume. So, what do you think about what's happened there in the blow up in terms of like the mad scramble into housing that we saw, and now the subsequent kind of dip, and maybe even it's getting even worse than just a slight dip. You might even call it a pseudo crash in certain parts of the market. What are you seeing there? What kind of color can you give us on the Vancouver and Victoria housing?
I would say living in Vancouver as I have for a lot of my adult life, it was the greatest trade I never made. I never had the money to kind of get started as a homeowner, and certainly wasn't willing to starve to death, to pay down a mortgage. So I wanted to have every cent that I had in my commodity trading accounts because, I had some control over that. And I just watched in amazement as the real estate market just soared and soared and soared. I also, I never wanted to take on debt. I had some real bad experiences when I was a kid where I remember going into a motorcycle shop with a buddy, and I'm looking at a motorcycle. There were Nortons, and the sales guy says to me, "Hey, you like that? You want to buy that?" I said, "Well, I kind of like it, but I haven't got enough money." What's the cost? It's $1,500. He says, "How much have you got?" And I said, "Well, I got maybe $800." He said, "Sold. You could drive out of here today with that thing." And I thought, "How do you do that?" And he said, "Financing." I said, "Oh, okay." So I got behind on my payments on the motorcycle when I was like a 21-year-old kid, and I just never liked being in debt. So when I bought my beautiful house over here in a little town on Vancouver Island, I paid cash for it.
Nice.
Fair enough. So now, do you think you must have those stories of what you saw around you? Do you think that the Vancouver market is actually topped, and are those the obscene prices that won't be seen for a long time again?
Because of the training we get in the commodities market, I think, where you see things go up and then go down, and often go down faster than they go up. I kept thinking for years that the real estate market was goofy, overvalued in Vancouver, and for years I was wrong. Okay, so that was it's a nice humbling thing, and that's a good thing to have in your personal resume. Certainly, the immigration into Vancouver was a driving factor to it. The geography, there's just not that much land. There's the ocean, there's the mountains, there's not that many places you can build stuff. So, there was that. And then, like any market, momentum begets momentum. So, yeah, do I think it's overvalued and all that? Well, now that I'm a homeowner, I hope not. but here's the thing.
Now you got skin in the game, and so you don't want to call the bear.
He's talking his position. He's talking his
position. No, I live on a little town in Vancouver Island here, and this is the best weather in Canada in the winter. So the great gray wave, as I call it, people all across Canada, as they retire, they're thinking, hey, instead of staying here in the ice and snow, why don't we go out to Victoria where you can play golf 12 months of the year? So there's going to be a bid for those properties out here. Don't you worry.
No, I tend to agree. I actually love Victoria because I hate the rain. I'm a Winnipeg boy, and so for me, kind of humidity is terrible. I'm used to the cold as long as it's a dry cold. So I find the humidity terrible. And the one thing about so I hate the rain especially. So Vancouver, to me, that month in the winter when it rains every day, or even sometimes you get multiple months where it rains every day, I feel like I just kind of slip into a cold bath and slip my wrist because I couldn't be able to take it. But Victoria, on the other hand, is beautiful, and it's a microclimate because just down the road at the airport, it rains like twice as much as the actual city of Victoria.
Yeah,
it's for some reason that one little
Victoria
section
and where I live here in the Qualicum Beach area, we get about a quarter to 1/3 of the rain that Vancouver has. But you just reminded me of something there. That Saskatchewan next year, they're coming out, and on the bottom of their license plates, like, in Alberta, it says Wild Rose Country. In British Columbia, it says Beautiful British Columbia. In Saskatchewan, apparently, they're going to say, but it's a dry cold.
Hey, don't knock it till you've done it. Listen, you mentioned Palm Springs. People, like, that's the thing. I didn't realize that you know how there's humidex and things can get hotter. It can seem hotter than the actual temperature. Humidex works the other way. And when you go to Palm Springs or Palm Deserts, it might be like 100. Let's just do it in American degrees because that's how they do it. It might be 120 degrees, but the humidex is actually it feels like 95.
I've spent lots of time. I go down for a couple of months at a time in Palm Springs. It's like Vancouver's backyard, really, and a lot of friends and clients to be down there. I love going down to Palm Springs. It's just a perfect. It's 2.5-hour flight, the same time zone, everything. You know, I used to go all up and down the west coast of Mexico when I was younger, but you know, now that I'm busier with my business and that, Palm Springs is just a great alternative to living in Canada.
I couldn't agree with you more.
Do we want to talk about trading more?
Yeah, I guess we'll just sure.
So actually, I wanted to talk markets, but I also wanted to just start off though asking you, like anyone who's been trading for as long as you have, you know, multiple decades, has obviously paid their tuition to the markets and learned through the School of Hard Knocks. What for our listeners, especially we have a lot of young listeners that love the idea of trading. What wisdom would you be willing to share with them in terms of you know, how what they should do, what they should look out for, what you experienced? Anything you want to share with us?
I would start by saying that I am much more of a poet than I'm an engineer. That's just who I am. As I said earlier, I went to creative writing school when I was a kid. I'd say the people that I saw as retail clients over the years that most likely got into trouble were engineers and doctors.
Really?
I mean, poets, you don't want a poet building a bridge. You know, you want an engineer to do that. But so I look at markets more like a poet would. I don't have any idea how to run a spreadsheet. I'm not interested in that. What I do know, or I should say one of my opinions is that managing risk on your trade is way more important than what process you go through to select the trade. I mean, you got to have a process to select the trade, but once it's done, then you got to live with it. You know, you either stay with it or you don't, and you're going to lose a lot. And that is really hard, especially when you have a bunch of trades in a row that go wrong. You think you're fooling yourself all the time that you had any idea what to do. I'd say if you can somehow learn to forgive yourself for making trades that lost money or not making trades that you think you should have. I mean, forgiveness is going to be real important. If you're a hard ass about that, you know, you're just going to drive yourself to bad habits.
Well, that's.
I couldn't agree with you more about that. And when you mentioned the fact that doctors and engineers are the ones that get themselves into the most trouble, I think that has to do with the fact that if you think about those two professions, they're very rarely wrong, and the consequence of them being wrong is devastating in that they will, you know, the bridge will collapse, they'll kill the patient. So therefore, they live in an environment where they are right almost, you know, let's hope all the time, 100%. Maybe it's 99.9999, whatever. It's a very high a level. And the problem with trading is that nobody is even close to that amount, and dealing with that uncertainty ends up being difficult for them. So I think that's like I agree with your analysis that that's why they might have more trouble. And it's interesting to say, you know, you compare yourself to a poet as opposed to as a kind of an engineer. That's an interesting way of looking at the markets.
Well, I would just an idea I had at one point in time. I think here's something I've often said. I've been in largely the retail end of the business, although I've had some huge corporations as clients too. But I've just watched, believe me, hundreds and hundreds and hundreds of people trade, and on balance lose millions and millions and millions of dollars. And I'd say, what is it that these folks have in common that I will not do? And the commonality is they will not get out of a losing trade. It's the old, well, let's give it another day or two and see if it doesn't turn around. That is the death knell. If you find yourself doing that, you know, just stop.
Yeah.
I would say to my guys, it's only a trade. It's only a trade.
Yeah.
Yeah.
Yeah. I always say to the people that I train at Big Picture Trading, I always say over your trading career, you're probably, if you're successful, you're going to end up placing tens of thousands of trades, and your success is not based on any one of them, but rather the process you use to execute all 10,000 of them. And the thing is that a lot of people that can't cut a loss are the ones that get emotionally hung up on the fact that this trade has to make them the money, and they can't let it go, and they become trapped, and they don't
Yep.
step back and understand it's just one of many in the process. But listen, Victor, I want to get back to some of these markets and continue conversation also, because you talked a lot about the kind of more exotic currency pairings, and you didn't touch on, I wanted to ask you a little bit more about some of these majors. Particularly, I find that the euro and the yen are, as they cross against the U.S. dollar, really they've been very compressed. There has
Yep.
been no meaningful trend emergent there. Do you feel that? Do you have an intuition, or do you have a trade on that you're thinking in terms of where these currencies are going next for a big move?
I don't have a trade on right now, but I saw something today that was a little bit of an aha moment. I think it was on the Market Ear website, and they were saying that the implied vol on the Euro US right now is the lowest it's been since the Euro came into existence. And I mean, you can
Wow.
feel
Yeah.
it. I look at my screen here, like I'm on the West Coast. I'm up around 4 in the morning. Hit the space bar, the screens light up, and I go, look at that. Yeah, we're up or down a nickel on the euro. It's like there's nothing going on. And
Nothing.
I remember
It's
being in a bank trading room. Gosh, it's got to be the late '80s, and like the Swiss franc was trading in around a 4% vol. And I'm talking to the guys, and everybody's mumbling about this. And like, sure as hell, like, I don't know, within a week or two, bada boom, things took off. The vol kind of gets compressed, and then away it goes. So, I'll just wait and see where it goes. Right now, I don't have a thought about which way it would go. I want to just put
so
a little coda to something you just said about making tens of thousands of trades. I think all of the profits you're going to make from those 10,000 trades are going to come from maybe 10% of them. The other 90%, if you do everything right, are just going to kind of offset each other. Some winners, some losers. And the one thing you want to avoid is the big loser. And every once in a
right.
while, sort of despite yourself, you might stumble into a big winner, which will make the difference. But mostly it's just a game of grinding it out, remembering that it's a marathon, not a sprint, all that sort of stuff, and sizing. I mean, I trade way smaller size than I used to. Well, when I was
Right, right.
trading as a currency analyst for Conti back in the early '80s, I mean, I would routinely trade through my margin. I'm just way over trading. But again, in those days, we were looking to make, you know, double, triple, 10 times your money, and if you wanted to do that, you had to goose it. But I think the guys that stay alive, just kind of say it's only a trade. For me, like a 1% loss on a trade, okay, but it's getting to the point where I'm going to get out of it, and I'm certainly not going to hang on much longer. So sizing's real
Right.
important.
So, Victor, one of the things that I always tell people that is if you have to ask what the margin is, you're trading too big.
Oh, for sure. I
Yeah.
used to say
Anyways,
to my brokers, do not let your clients use more than 50% of their capital for margin, because if they do, they're going to lose what they have, and they may take you down with them.
yeah, that's good
So,
advice. So Victor, we're gonna have to, wrap it up here. I just a big
super.
thank you to be on and sharing all these kind of trading nuggets of wisdom with us. One last time, where can people find more about the services you offer and your great kind of weekly wrap up that you offer?
Yeah, the weekly wrap up, I call it my trading desk notes. It's polarfuturesgroup.com. That's a site that my son Drew and I have together. We're both licensed futures and stockbrokers here in Western Canada. If somebody wants to do business with us, they probably can. And if you're in the United States, you probably can't because of licensing, but virtually any place else in the world. And, everything on the website's free access. And we just want to wish everybody the best and have fun.
Terrific. Well, thanks a lot. It was a
Well,
pleasure
Victor-
having you on, Victor.
Yeah, Victor, it was such a pleasure.
Thanks, guys. Cheers.
Take care. Have a great day.